We have all of your Tesla stock breaking news here in this video. We will also discuss where I think Tesla stock is going next. Your biggest catalyst of this week is Nvidia earnings, and I'll go over the relationship between Tesla and Nvidia if you don't already know. In a new Wall Street Journal interview, Tesla's chief designer said that Elon Musk remains very involved in the design process, adding that Elon sometimes sends him ideas he saw on X. Other times, Franz, who prefers to talk through design ideas in person, catches Elon where he can. Franz compared Tesla's upcoming affordable car to Volkswagen's Beetle or Ford's Model T. Quote, a product for the masses, he said, albeit one that feels like a continuation of the idea of the future. Now, it's important to remember that we are expecting an announcement in 2024 for this $25,000 vehicle. An initial kind of start date, if you will, towards the end of this year. We're expecting deliveries could start in the second half or late 2025. Now, the markets price these things in ahead of time. So by the time Tesla announces this vehicle, analysts are going to be raising estimates. Analysts are going to be giving their opinions on this vehicle, and given the success of other Tesla products so far, I'm sure this one's going to be no different. This lower priced Tesla will boost estimates for EPS, will boost estimates for obviously margins and overall revenue and deliveries. This will be fundamentally a very big deal for Tesla. Now, I think one of the best things that is currently going on for Tesla and for Tesla stock investors is the competition that Tesla will start to see in the lower priced EVs. You're starting to get companies like Ford and like GM that are announcing about $25,000 EVs that will be coming out in 2024 and 2025. Now, why is this such a positive for Tesla stock investors? Well, it forces Tesla to work as fast as possible to get this $25,000 vehicle out. 3 years ago, I was, seeing headlines about this $25,000 vehicle, but there was no rush to really create that. Let's be honest. GM, Ford, they were long behind the ball. They were just trying to get EVs to market at that time that people would buy besides the Chevy Bolt. Now that they're seeing a little bit of traction, right? GM and Ford, they're still selling like a tenth of the EVs of Tesla, but they're starting to get some traction in EVs. Now that they're coming out with some of these lower priced models, like here, GM confirms 2024 Chevy Equinox EV will start at about $35,000, $27,500 after the federal EV tax credit. It really forces Tesla to work as quickly as possible, which Tesla is working for you because you are the owner of Tesla, as you own Tesla stock. So this is great news. I am a firm believer. If we had seen a lot of FSD competition over the years, we would already have robotaxis out on the road right now. In a capitalistic world, when there is competition down your throat, you have to innovate as quickly as possible. Competition is not Tesla's enemy. It's Tesla's friend if you are a Tesla stock investor. Question is, does Tesla remain the leader in the pack? And I think anyone saying no is quite delusional at this point. Tesla will be the leader in the EV field. They just have to continue to innovate, continue to expand, and grow in the right direction, which a lower price vehicle is the right direction. And the fact you're seeing competition, I love it. So that is something I really wanted to address here in this video. A lot of people think Tesla competition is bad. No, Tesla competition is very good because it forces progress with Tesla. In other breaking news, Tesla will reportedly start Giga Mexico construction in March, according to the governor of Nuevo Leon, Samuel Garcia, who said he spoke to Tesla's management about the topic. Now, this is also, again, kind of along the same lines of competition. You have to start getting vehicles cranked out of Mexico to create this lower priced Tesla in mass quantities. So you got to start construction on this plant to stay competitive. This competition you're seeing from GM and Ford, or upcoming competition you're going to see with lower price models towards the end of this year in 2025, it forces Tesla to start construction of Giga Mexico to get things rolling, which is positive for you as a Tesla stock investor. Electric vehicle startup Fisker said on Friday it had received a non-compliance notice from the New York Stock Exchange as its stock had closed below $1 on average for 30 consecutive trading days. Another Tesla killer down the tubes, as DC609 says here on X. Tesla has put a new product family image on its fleet and business website page, featuring the Cybertruck in the middle, and that just looks scary looking at. All the Teslas really look scary looking at you, but the Cybertruck, yeah, that's definitely one you wouldn't want to mess with. The Tesla Model Y and Model 3 collectively generated over $70 billion in revenue in 2023. Tesla now shows on the Model Y inventory order page in the US the starting price including the $7,500 federal point of sale credit. And you can see here a Model Y rear wheel drive now starting $33,340 after the federal tax credit. Ford has announced massive price cuts to the 2023 Ford Mustang Mach-E lineup in Canada, with reductions to MRSP of between $5,000 and $13,000. In other news, to give President Biden a better chance of winning the 2024 election, the administration is considering relaxing its limits on tailpipe emissions that are designed to get Americans to switch from gas-powered cars to EVs, according to the New York Times. Barry Black says, with Tesla again building up cash at a stupid rate, $29 billion at the end of 2023, with predictions cash could hit $150 billion by 2030, and Tesla, quote, in between two major growth waves, that's what Tesla and Elon said. I'll ask again, why doesn't Tesla distribute some of its unneeded cash, $10 billion over 3 years, back to shareholders? All of Tesla's tech competitors are returning cash to shareholders. It's the sensible thing to do rather than let cash build up unchecked at 4 to 5% ROIs. Now, a lot of people don't like the buyback thesis. Now, for whatever reason, that doesn't make sense to me, because what is really driving stocks higher right now? It's earnings, profitability. Now, if Tesla buys back its stock, Tesla's EPS will grow. Think about it like this. Tesla has 3.3 billion shares outstanding. Let's say Tesla does $10 billion of profits, right? Divide that by 3.3 billion shares outstanding. That is an EPS of $3.03. Tesla did about $3.67 of EPS for 2023. So these are only rough numbers, and I'm not necessarily trying to compare to, last year. Let's say Tesla, again, does $10 billion in profit. But let's say Tesla did a share buyback and they bought back 300 million shares of Tesla stock. Well, now you'd only have 3 billion shares outstanding. Divide that by 3 billion, the same profit amount. Now you're at $3.33 of EPS, thus making Tesla stock more valuable. That's the easiest way to think about a buyback. That is how Tesla returns capital back to shareholders. And then obviously in the process of buying back the stock, you support the stock during bad times. And, look at an Apple. Apple's only grown to where it is because of its massive share buybacks over the years. Apple really hasn't grown its profitability much organically for a long time. They've been buying back so much stock, their EPS has been able to grow a lot over the years, about 17% on a year-over-year basis for many, many years now. That's why a buyback could be very positive for Tesla stock investors. As long as Tesla did not need a additional $10 billion in the bank, take out $10 billion, Tesla's still going to be sitting with almost $20 billion in cash, Tesla would be just fine. Perfectly fine with $10 billion less in the bank and just return that to shareholders. Now, a $10 billion share buyback, again, does not require Tesla to buy back $10 billion of stock. It gives Tesla the right to buy back $10 billion of stock if they would like to. Now, most of the time it's frowned upon if you announce a share buyback, but you don't buy back that much stock. So inevitably, Tesla would buy back some stock, but I think they would do it in a pretty conservative way. And especially as Tesla stock has fallen now, I mean, Tesla can buy back a lot more shares. Just imagine a $10 billion buyback, let's say in theory, divided by $265 per share. Tesla would have been able to buy back about 37.7 million shares of Tesla back here in January of 2024 when Tesla was around 265. Now, let's say if Tesla wants to do a $10 billion share buyback right now, divide that by $199.52. Now Tesla could actually buy back about 50 million shares worth of Tesla stock. So, yeah, it will boost EPS. And for the same analogy that we just previously went over, $10 billion, say, hey, at 3.3 billion shares of profit, divide that by the shares, that's $3.03 of EPS. Okay, but let's say if Tesla is able to reduce their share count by, let's call it 50 million. Divide that by 3.25 billion. And now you'd be looking at EPS that's about 4 cents higher for the full year, in theory, if Tesla only had $10 billion of profit, which that's obviously going to be higher, so these numbers are going to look different. But that just added 4 cents of EPS to Tesla just by doing that share buyback. Now, obviously, you know, who knows where Tesla stock would be in the event Tesla did buy back stock. The lower, the better. And it also, again, just in sense of raising the EPS, that's good, but it also stabilized the stock during bad times because now you have Tesla itself that is buying back the stock. So let alone just the EPS boost, you also get usually a price appreciation because the company is buying back their own stock. But yeah, I don't really understand where the argument comes from where people do not want Tesla to do a share buyback. I think Tesla stock would probably rally 5 to 10% if Tesla announced a buyback. I don't know about you guys, but I like to make money. So I'm team buyback for Tesla all the way. Tesla Chan says in the last 6 years of data, there have been 0 recalls due to Tesla's fire risk. Legacy Media reports Tesla vehicles are dangerous, but they are actually the safest vehicles. Look who's number one here. Ford, with 45 recalls in the past 6 years for fire-related incidents. Then you have Hyundai, Volkswagen, Chrysler, Kia, Mercedes, BMW, GM, Nissan, Toyota, Honda, and then Tesla at 0. Even Honda, the second best, is at 10. Yeah, Legacy Media will not tell you that. We did get a new AI investor sentiment that did come out on Thursday. Bullish investors dropped from 49.0% to 42.2%, so that was quite a big drop. Neutral investors jumped from 28.4% to 31.1%. And bearish investors jumped from 22.6% to 26.8%. Global inventory numbers for the Tesla lineup shows a slight acceleration in the inventory numbers for the Model Y, a large boost for Model X and Model S inventories, and a little boost here for Model 3 inventories. I would say that's probably healthy though right now, as we're seeing a lot of demand for the Model 3. Google Trends data for the Tesla lineup indicates the Model Y is seeing a lot of search trend activity, going from 35 to 39. Model 3 is actually dropping quite a bit from 37 to 33. The Cybertruck dropping from 26 to 21, and the Model X staying at about 9 to 10 on an any day period. Tesla continues to run about 2,000 different ads via Google. Tesla over on StockTwits is seeing sentiment at 44, which is bearish, and we do tend to see more bearish numbers over the weekend, some lower message volume as well, and that's exactly what is happening. Message volume is now at 36, which is categorized as low. Yesterday, it was at 62, which was categorized as high. Again, people kind of take the weekends off. I don't blame you, but shout out to you guys that are watching these videos that are trying, even on the weekends, to better your financial situation, at least become more knowledgeable. The participation ratio is sitting at 54, which is a lot higher than where we were recently, at some points being extremely low or low. This just means there's more people talking about Tesla. Option activity on Friday from hedge funds and institutions in Tesla stock was quite positive. You had 1,218 orders totaling $343.3 million with a positive order value of 71%. You did see on Friday volume to the call side of 67.71% and volume to the put side of 32.29%. So little over a 2-to-1 ratio, 2 times as many calls being bought or traded at least for every one put. And short sellers have been taking a beating recently as Tesla's short position number, adding all the shares short together, it was at about $14 billion. Now it's at $18 billion. So shorts have taken a beating from the low at $175 that Tesla briefly hit. You do have 3.28% short interest of free float, which is higher than what you have seen in recent times. You do have a cost to borrow fee at about 0.77%, which is on the low side, indicating there's not a lot of people trying to take on new positions in Tesla stock via shorts. The percent of stocks above their 50-day moving average on Friday did decline by about 3.5%, down to 55.37%, well off of your high on December 28th, which was about 86% of stocks above the 50-day moving average, which coincidentally was the high that Tesla hit as well. December 28th marked a downturn, or the start of a downturn for Tesla, but you are off of your low at 43% that you just recently hit back on February 13th. And a broadening out of our markets could likely happen next week when Nvidia reports their earnings. Now, I have explained this here on the channel already, but essentially, if you look at small cap stocks or Tesla, really interest rate sensitive names, they've been getting the life sucked out of them by Nvidia. And it's been very, very obvious. So you can take, for an example, and look at Nvidia. And you can actually already see this. On February 6th, Nvidia was down 1.6%. On Feb 6th, Tesla stock was up 2.23%. The next red day after Feb 6th for Nvidia was on February 8th. Tesla stock on February 8th was up 1.06%. Nvidia on Feb 8 was down 0.65%. The next red day after that was February 15th. Nvidia was down 1.68%. What did Tesla do on February 15th? Was up 6.22%. Now on Friday, Tesla was slightly in the red, down about 0.25% in regular trading. Nvidia was also down about 0.06%. But Friday was a little bit harder to read because we got bad PPI data, bad core PPI data. So I don't really put too much thought into Friday in regards to this relationship because of the data, and just it was bad, right? So you're not seeing inflows really to anywhere. If anything, you see net selling across the board. But by and large, what we've seen recently is when Nvidia sells off, Tesla does well. And that's because Tesla has lost hundreds of billions of dollars in market cap value. Even on CNBC, they've talked about people selling Tesla stock and buying Nvidia instead. Now, Nvidia reports earnings this upcoming Wednesday, and the implied move is around 11%. That would be a $200 billion move, higher or lower in market cap value for Nvidia. That's if Nvidia does move 11%. That's the most that has been priced in to Nvidia for earnings over the past 3 years. Now, we did have one of the top analysts for Nvidia just come out and give his opinions on the upcoming quarter. Squana's Christopher Rowland, a 5-star analyst rated in the top 1% of the Street Stock Pros, confidently declared, quote, signs pointing to yes. He says, not in those exact words, of course, to be precise, what Rowland actually said is that investors have high expectations of Nvidia stock, but also that the company is executing at a high level and probably deliver a strong report coming next week. And it had better be right. At a current PE ratio of more than 95 times earnings, Nvidia stock has high expectations baked right into its stock price. As Rowland sees it, simply hitting analyst targets for Q4 earnings of $4.56 per share on $20.4 billion in sales won't be enough. Nvidia needs to deliver a clearer earnings beat with sales at least $1.5 billion ahead of expectations in order to justify the stock's high price. Now, he goes on to say that Tesla and Meta are continuing to buy GPUs. That is true, but the lead time of these GPUs, which is basically saying, hey, if you put an order in for Nvidia H100s today, how long is it going to take for you to get those? Well, last quarter, the quarter before then, it was about 12 months. So you had to wait a while before you get your GPUs. Now it's 3 to 4 months. And the MSRP for like an H100 GPU is like $8,000, right? Nvidia's been able to charge $35,000 because everyone wants to get their hands on these GPUs. There's been a lack of supply as per the 12-month wait time that we were seeing before. Those wait times are coming down to 3 to 4 months. That could put pressure on pricing as well. Companies may not be willing to pay $35,000 per GPU if indeed it's not going to take as long to get them. Some companies might say, hey, we can wait 3 months for our GPUs. We have enough right now. We don't have to pay $35,000. No, thank you. That's a potential risk. And right now, Nvidia is pricing in a lot as far as, expectations for growth. The law of large numbers will start to work against Nvidia. I personally think, just like last quarter, it does not matter what Nvidia reports. The stock is going to fall post earnings. And that's actually what Christopher here says as well, that the stock could fall post earnings because he expects 21.5 billion of total revenue, which by the analyst's own logic could come as a disappointment to investors. But again, I really don't care what Nvidia reports. The stock's probably going to fall. Now, to what degree? You're pricing at 11% via the options. You almost have to fall next week for Nvidia, or Nvidia almost has to fall, because what's fueled Nvidia to rise? Obviously, people buying, shares, but you've seen a lot of option activity. Nvidia has consistently been the number 1 or number 2 most traded stock for call options. Who takes the back end of call options? Market makers. Well, market makers' positions in Nvidia, as a consequence of that, have gotten so large, they need an unwind in the stock to get rid of all of the shares and all of the hedging the market makers have had to do. So basically, when you buy a call option, let's say the $500 call, well, Nvidia is now $700+, you made a lot of money. What the market makers have to do, they had to go out and buy stock under 500 to give it to you at 500. So market makers have a ton of stock right now in Nvidia based on these options. That really helps Nvidia on the upside. But once you get a catalyst to send shares lower, a disappointing catalyst, if you will, then that allows market makers to sell those positions and to essentially de-hedge the option bets. Long story short, getting a little bit more complicated and in-depth into that than I would have liked, it does mean Nvidia probably has a 95% chance of falling after earnings. The question is there any kind of growth concerns? Do the law of large numbers start to affect Nvidia negatively? And that's just, last year, for this quarter, Nvidia did like $6 billion in revenue. They're expected to do $20.4 billion. They're not going to be able to grow at nearly as fast as they did over the past year. That could start to put pressure on PEG ratios, right? Price, earnings, and growth. So essentially, growing at 15 or 20%, you're still going to be growing billions and billions of dollars. But is that enough to justify valuations? Probably not. So valuations will come down. The stock will come down. As we've seen from that recent correlation, that could be good news for Tesla stock, for other small cap names like the Russell 2000. We have seen that direct correlation. Next week, we don't have any big economic data coming out. So the big story will likely be Nvidia's earnings. If Nvidia falls, Tesla will likely do well. In that case, if I'm right and Nvidia does fall, I think Tesla stock is easily going back to the 210s, if not 220s. Now, it's not going to happen the day after. It's not going to happen, in like a 2-day span. It might take a week or two for Tesla to get back into the 220s. That's being a little bit more conservative. I think it could happen quicker than not, but just being a little more conservative, it might take some time. But overall, I do think it is coming. And that's a beautiful position to be in for Tesla stock. You also have this inverse head and shoulders pattern. Shoulder, head, shoulder. Inverse head and shoulders tend to be very positive. That would also support a rise to, your next potentially major moving average, which is your 50-day moving average at $221 per share. You mix that with an RSI that is neutral at 49 for Tesla, and the MACD, which is still very negative, curling upwards at a very aggressive pace. That also bodes well for Tesla stock continuing higher from here. So let me know what you think about this information down below in the comment section. Is Nvidia going to have good or bad earnings? Bigger question, is Nvidia going to fall or rally afterwards? Because, if you're pricing in 11%, what we've seen this earnings season is what stocks are pricing in is most of the time what happens, right? So up or down 11%, Nvidia is likely to fall 11% or rise 11% after earnings. Let me know what you think down below in the comment section and what kind of effect that could have on Tesla stock. Also, let me know if you have any trades on Tesla based on Nvidia's earnings. Are you expecting Tesla to, rise after Nvidia? Are you expecting Tesla to fall after Nvidia? Let me know down below in the comment section. If you guys want to come trade with us live in real time, we will be trading Tesla and Nvidia in this upcoming week. Check that link out down below in the description of this video. If you guys also want to go follow the X account, that is Michael Tyler over there. It costs you absolutely nothing to do so, so take advantage of that. Nonetheless, you guys enjoy your weekends. Keep in mind, Monday, there will not be trading, so you get a little bit of an extended break, an extended weekend. More time to come hang out with us and talk about Tesla stock, I suppose. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.